The top business stories live for the Sky News City studio. Sir Jim Ratcliffe outlines his three-year plan for Manchester United, including the development of Old Trafford. While aluminium prices hit profits of the mining giant Rio Tinto, I've been speaking with the Chief Financial Officer. Plus, record annual profits for HSBC despite an unexpected drop in earnings for the final 3 months of last year. Good afternoon, this is Business Live with me, Ian King. We start this afternoon with some breaking news. Sir Jim Ratcliffe has been speaking for the first time since his takeover of Manchester United was confirmed, unveiling a three-year plan to improve the club's fortunes. He's been speaking to reporters about how he wants to develop Old Trafford and knock the club's great rivals Manchester City off their perch. The Ineos billionaire's purchase of a 27.7% stake in Manchester United was finally confirmed yesterday. Well, our sports correspondent, Rob Harris, was at the briefing and joins me now. Rob, what's he been saying?
Well, he's been talking about how he hopes to revive Manchester United's the former glories on the pitch. Sir Jim Ratcliffe talking about needing to find a playing style off the pitch. It's all about what do they do with the redevelopment around Old Trafford, a stadium that's fallen behind rivals. And Sir Jim Ratcliffe has revealed that he's looking at either a refurbishment of the stadium that could cost £1 billion, or another vision is an entirely new stadium on the same site and using the existing Old Trafford for the women's team and for the academy and concerts. So that would be a significant redevelopment of the area of Trafford, and he believes there should be public money behind it. He was talking to me about the levelling up, and if that is a true aim of the government, that the South has had a lot of funding, whether for HS2, given that he's referenced it obviously not going to Manchester anymore, and indeed referencing the Olympic Park being built for the 2012 Games. He believes the North should get some of that cash, and that should be put towards rebuilding the Manchester United stadium. As for some of the other aspects of the future, it's about how can United win the Premier League for the first time since 2013. He doesn't want a 10-year plan, he says. He wants them to be winning the title within 3 years, and he's certainly setting out a new vision for how the operation will look. He is, of course, only not the majority shareholder, but he will be part owner, owning 27.7%, while the Glazers do remain the major shareholders at United. And he's obviously still working through how that will work. But it's Sir Jim and his Ineos operation that will be now overseeing football operations, and also some big decisions to make on the future of Mason Greenwood, who is currently out on loan in Spain, having been subject to various allegations which were dropped. And that's something he said he'd be looking at, whether he brings Mason Greenwood back into the club at all. But for Sir Jim Ratcliffe, for him, it's from today, it's where he believes the rebuilding of Manchester United begins. He sees Manchester City as one of now the best teams on the planet, but he wants to say, knock them off their perch.
All right, Rob, thanks for that. Now, the government enjoyed a record financial surplus in January due to a big rise in self-assessed income tax receipts and lower interest payments on the national debt. The Office for National Statistics said today that the government achieved a surplus of £16.7 billion during the month, up from one of £7.5 billion in January last year, but lower than the £18.7 billion the market was looking for. It means that during the first 10 months of the financial year, the government borrowed £96.6 billion. Well, that was down £3.1 billion on the same period last year, and some £9.2 billion less than forecast by the Office for Budget Responsibility. That, in theory, should give Jeremy Hunt, the Chancellor, scope for some tax cuts in his budget on the 6th of March. The national debt stood at £2.65 trillion at the end of January. That represents 96.5% of GDP. Some other business news stories for you now, and HSBC has reported record annual profits despite an unexpected drop in earnings for the final 3 months of the year. Europe's biggest bank reported a pre-tax profit of $30.3 billion for 2023. That was up 78% on 2022, reflecting an increase in its net interest margin, the difference between what the bank charges borrowers and pays depositors. The bottom line was also boosted by cost reductions, a rise in trading revenues and an increase in customer numbers, as well as a drop in the sum that the bank put aside to cover loans it does not expect to be repaid in full. However, during the final 3 months of the year, HSBC saw profits fall from $5 billion to $1 billion, following $3 billion worth of write-downs in China. Those full-year numbers were lower than the $34 billion expected by the market, and shares of HSBC have fallen by 8% this afternoon. BAE Systems said today it's sitting on a record order book as governments around the world step up defence spending. The UK's biggest defence contractor said its order backlog had reached a record level of £69.8 billion after it received orders last year of £37.7 billion. That followed what BAE described as a number of significant awards, including work on submarines under the AUKUS agreement between Australia, the United States and the UK. BAE also received big orders under the Dreadnought nuclear deterrent submarine programme and a number of orders for combat vehicles, including a big one from the Czech Republic. Underlying earnings for 2023 came in at £2.7 billion. That was up 9% on 2022. The shares have fallen 1.5% this afternoon. And lower aluminium prices have hit profits at the mining giant Rio Tinto. The fifth largest company in the FTSE 100 reported underlying earnings of $11.8 billion for 2023. That was down 12% on 2022, thanks mainly to aluminium prices being 17% lower on the previous year. Prices of copper, diamonds and industrial minerals were also lower than in 2022. The decline was partially offset by higher shipments of iron ore, Rio's single most important product. I've been speaking to Rio Tinto's Chief Financial Officer, Peter Cunningham. Obviously, the results were dragged down by aluminium prices, but I thought you sounded quite a positive note in the statement about where prices go from here.
Aluminium prices were down 18% year on year, and aluminium is more consumer orientated, so it's had a tougher time than some of the more industrial metals in the portfolio. But we are positive on aluminium going forward. I think the industry structure will change, and our assets are very good shape for the future, given our very low carbon footprint from our aluminium assets.
Obviously, the highlight in the results is increased production at Pilbara and reasonably robust iron ore pricing. Where are you seeing Chinese demand this year?
So Chinese demand has been good. So we've had 4 years of Chinese steel production, over 1 billion tonnes now, Ian, and that's good for iron ore. And right now, certainly property's been down, but we're seeing other sources of demand growth, particularly around infrastructure, around autos and manufacturing. So it's certainly been a pretty robust market.
And when property, if and when property comes back in China, presumably that adds another leg to demand, does it?
It does. I mean, our view is we're sort of in a situation where, Chinese steel will start to peak in terms of demand, and property may not come back to where it was, but the market remains a very significant and positive market for us.
Looking at the investment pipeline, obviously the big outlay over the next few years is Simandou, which is your big project in Guinea. People seem to be worried about the costs escalating.
So I think this is an area we've done an awful lot of work over the last few years to really lock down the capital costs. It is a big investment for us. I mean, we will be funding it to the tune of $6.2 billion. But I think we've put in place a strategy here with our partners to really have some confidence in the capital costs. It's a very large project, but I think one we have confidence in.
Some of the things that you're doing there are absolutely vast. For example, building a 600-kilometre railway. Give people an idea of the sort of scale of the work involved.
It is certainly of that scale. I was there 2 or 3 weeks ago and flew over the railway line and the mining area. It is. I mean, it is a 600-kilometre railway line, which we're connecting with a very large mining development as well. It's going to be 2 or 3 years, very hard work, but we'll have first production by the end of 2025.
Now, the big news at the end of last year was that you formed a joint venture in Chile with Codelco for a new copper deposit, Nuevo Cobra. What's going to be the costs involved there in bringing that to fruition?
So it is very exciting because, Chile is copper, and it's somewhere, we certainly would like to increase our footprint. It's early stage, and so we're still in sort of exploration and really sort of firming up with what that project might look like. So too early to talk about costs or scale, but certainly a very interesting exploration project. I'm very pleased to be partnering with Codelco.
What are you seeing around the world in terms of labour costs? Obviously, labour markets are pretty tight almost everywhere you operate.
Yes, and in some areas, we are in particularly tight areas, such as Western Australia and Utah and Quebec. So we're certainly seeing it tight. It's something that we need to sort of work very hard, drive productivity through our system to offset. But it's something that is part of mining in those regions.
What about some of the other industrial minerals that you produce. Obviously, pricing was weaker there last year. Are there any specific factors? I mean, titanium oxide was the key one, it seems to me.
Again, it's part of the cycle. Titanium dioxide is heavily leveraged to the paint sector, and it's been going through a cyclical downturn, and that's flowed back to our products, which really do go into the paint sector. So again, we'd expect that cycle to come back as the property sector comes back globally to return that sector to better times.
Now, last year you recommitted to halving your Scope 1 and 2 emissions by 2030. What progress have you made in the last 12 months on that?
So I think we have made good progress. We've got a very clear set of global programs now that we're pushing on. We're making, particularly around the deployment of renewables to our assets, we're making good progress. And in terms of sort of using biodiesel in some of our operations in the US, which makes a big impact on our footprint there. But a lot of our change does take time. It is R&D that underpins it. So we really do feel we're on track for our 2030 50% reduction target. But it will take time and investment to get there.
Now, obviously, you cut the interim dividend, which means that the full-year dividend is lower than last year, down 16% in sterling terms. What are you saying in terms of the dividend for the current year?
So Ian, we've had a very consistent policy whereby we pay out between 40 to 60% of our underlying earnings to shareholders each year. And actually, for the last 8 years, we paid out at 60%. In a cyclical business, that sort of payout ratio makes good sense, and we're paying out a dividend of $7.1 billion.
Mergers and acquisitions activity, the lifeblood of investment banking, was pretty subdued in 2023 due to a combination of rising interest rates, inflation, higher regulatory scrutiny and geopolitical tensions. However, with some of those headwinds now starting to abate, things may change this year. This week alone has seen a $35 billion merger in the US banking sector and a takeover approach for Currys, the UK's biggest electricals retailer. Well, joining me now is Rob Brown. He's Chief Executive of the investment bank Lincoln International. Rob, welcome to you. I mean, another big thing holding back M&A last year was differences between valuations between buyers and sellers. You think that's starting to fade away?
The short answer is I think that gap is shrinking. Whether we're in the fade away portion of it or not yet, I don't know. I think we will be. I think that gap is going to shrink, and it's going to be a little sector specific. But I think you are going to see that bid-ask spread between buyers and sellers get smaller and match as this year unfolds.
So what are the other drivers for activity, do you think, this year?
Well, I think there's several drivers of activity. One is the amount of capital that's been raised or sitting on the corporate balance sheets that wants to be put to work in buying companies. That money's burning a hole in the pockets of those investors. And on the flip side of it, their investors, the limited partners, did not get the returns of capital they've expected over the last 18 months, and they're putting tremendous pressure to return capital.
You're talking about private equity there. It's worth noting there's been a big amount of debt issued by corporates so far this year as well.
Yeah, I think that's not completely surprising because I think they're looking for ways to continue to grow their business, and debt capital is always a cheaper way to grow it than issuing equity capital.
Yeah, absolutely. Now, I mean, I'm asking you to become a bit of a hostage to fortune here, Rob. I mean, to what extent do you think M&A volumes might be up on last year this year?
I think they'll be up this year. I think you're going to see a slow improvement in the first part of this year, and I think there's a lot of ingredients and conditions that lend themselves to having a real acceleration of the market in the back half of the year. And whether that results in enough timing to close deals in 2024 or not remains to be seen, but I think you're going to see the market overall up with an acceleration into 2025.
And are there any sectors in particular that you're looking at?
Yeah, I think one of the sectors we're seeing really come back, and it was one of the first ones to turn down, is the technology sector. And I think in that sector, you asked me about the difference in values. I think that's a sector that's probably gone through its repricing earlier. So you're seeing buyers and sellers meet at values where both are willing to transact.
Who will be doing the acquiring then? I mean, obviously, companies like Microsoft have colossal amounts of cash on their balance sheet. Are you looking further down the corporate food chain in that sector?
I think you'll continue to see the big ones consolidate. The other thing people don't realize is, people used to think of tech deals as only going to strategic investors. private equity and venture capital, they want to invest in the tech world and the software world in a really material way. So I think you're going to see more and more of those going to platform investments for financial acquirers.
Yeah. And what about geographically? I mean, I know that you think India's potentially quite interesting this year.
Yeah, I think India is interesting, and I think a lot of Western companies have tried to de-risk China a bit. You know, they're not going to pull out of China. It's the second largest economy in the world, but as they think about, you know, risk, whether it's political or economic risk, they're looking for other places in Asia to continue to invest and grow. And we have a large office in India, and we're continuing to see that business grow and benefit from the kind of the China de-risk.
That's fascinating. Rob, I'm so sorry. We've got to leave it there. Thanks for joining me this afternoon. Good to see you.
Thank you.
Still to come here on Business Live, we'll have a look at how the markets have done this Wednesday afternoon. Stay with us.
And I'm Sky's correspondent based here in Washington, D.C.
Well, the plan seems to be to head to the police station where the policeman who fired the shots was based.
And everything, you know, his memories is all gone.
I've witnessed the remarkable passion for politics here, but the anger too.
We have to get Trump out of the White House.
I'm playing devil's advocate.
You've got your political agenda.
No, it's honestly...
God love you.
And beyond the United States, I report from around the world.
This is a town that is effectively encircled by the Russians.
We take you to the heart of stories that shape our planet.
I can hear now quite a few explosions in the distance here in Jerusalem.
What do you think of ISIS?
Everybody here, they know the truth of ISIS.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
European equities have finished the session in largely positive territory. Here's how they finished up in mainland Europe. All of the main indices in positive territory. A lot of company earnings in Europe today to the downside. The German kidney dialysis specialist Fresenius Medical Care has fallen 5.75% in Frankfurt, while JDE Peet, the parent of Dow Egbert Coffee, is off 5% in Amsterdam. But to the upside, Carrefour is ahead by 4.75% in Paris after the French supermarket giant raised its dividend by more than 55%. Well, here in London, the FTSE 100 has finished firmly to the downside, off 56 points. That is mainly due to HSBC, which has knocked 42 points from the index on its own, off that fall of nearly 8.5%. Also lower this afternoon, Glencore, the mining and trading combine, off just over 1% after its full-year earnings halved. To the upside, Intercontinental Hotel Group, which we mentioned yesterday, up another 2.5% nearly after yesterday's well-received results. Outside the FTSE, Currys is ahead by another 3.5% as investors await bid developments. Over on Wall Street, all eyes are on Nvidia as it publishes results later today. It's off 2% this afternoon, the Nasdaq off 0.5%. The other big talking point this afternoon is the cybersecurity group Palo Alto Networks. That has fallen 25% after its third quarter results missed expectations. Over on the foreign exchange markets, pretty quiet ahead of the release of minutes later this afternoon of the Federal Reserve's latest policy meeting. Sterling unchanged more or less against both the dollar and the euro, likewise the single currency against the greenback. As for the oil price, that has staged a rally this afternoon after drifting for most of the day. Barrel of Brent crude will currently set you back $82.69 a barrel. That's up a little over 0.2%. Well, joining me now, after a 10-month absence from the programme, Anna McDonald, Chief Senior Equity Analyst at Sustinary Global Investment. Anna, lovely to see you again. Let's start with HSBC. How could we not? The market seemed really quite unprepared for this.
Yes, it seems quite a big reaction, particularly for one of our top 10 UK stocks. I pulled out a few things that I think might be behind it. One is that even though impairments came in at 34 basis points, so 0.34% of the loan book, they did guide to that being in the range of 30 to 40 next year at the top end of that range. I also think the net interest income was possibly a little bit lower than expected. And finally, there were a couple of write-downs. One, and probably most importantly, the one to their 19% stake in a Chinese bank called Bank of Communications. So they've taken a 3 billion impairment there. So I was sorry, write-down there. So I think that's led to it. Otherwise, things seem pretty solid. They are increasing their buyback, and that's all good. But yes, I think perhaps some of those issues and just real exposure to China, which hasn't been growing as fast, has led to a few issues for them.
Now, another FTSE heavyweight reporting today was BAE Systems. I mean, the numbers look pretty good. The share price is off. What do you think lay behind that?
I think probably a case of travelling and arriving. The shares were probably around 5.50 pence at the time the Ukraine war broke out. They're well above 1,200 now. And I think that perhaps investors had hoped for maybe even a little bit more in terms of what they promised for next year. They say that earnings are going to be up high single digit next year. Perhaps investors were hoping for a little bit more also on the cash flow. Their order book is very substantial, though. We're seeing record order backlogs as countries scramble to increase their capacity. But it takes time for all that to actually be able to be built and produced. BAE Systems are doing what they can. They've employed 6,700 new people this year. It means additional costs. So it's not automatically all flowing straight down into profits.
Yeah, still a terrifically well-run company. What about Glencore? I mean, no surprise I see, they cut the dividend, earnings have halved during the year. No real surprise to see a bit of weakness in the share price there.
No, and we've seen this across the board. We saw that with Rio Tinto as well today, and then with BHP Billiton yesterday. Yeah, these mining companies, it's worth remembering that they really are subject to the very volatile prices that we still see for all the commodities that they're exposed to, whether it's iron ore, copper, or even in BHP's case, nickel, which has really been dreadful over the last year.
Anna, very briefly, late night for you watching Nvidia?
The market is so excited about Nvidia. It's quite incredible. Goldman Sachs says it's the most important stock in the world or something. Yes, it's the expectations are extremely high. This company has, I was looking in 2019, revenues are about 10 billion. They're forecast to hit 60 or 70 this year and perhaps well beyond that into 2025. It really is the only game in town when it comes to training these large language models.
Indeed.
And so it's vitally important to the markets.
Okay.
Huge
All right,
stock now.
and I've got to leave it there. Lovely to see you again. See you soon.
Thank you.
That's it from
Bye.
me. Mark Austin's up next. Do stay tuned. Cheerio.